Everyday investors interact with brands that you and I would recognize every single day, whether that's a Microsoft, whether that's an ExxonMobil, whether that's a Macy's. And at some point, those firms needed capital simply just to begin and start their businesses. And I think one thing that most folks don't recognize is before those companies had public market journeys, they had private capital to back them.
I think to understand the private capital markets, it's important to understand and realize that the public capital markets have been around for hundreds of years. The New York Stock Exchange was founded in the late 1700s. Whereas private equity didn't really take off until late 1980s. And it wasn't until the 2000s that there was secondary trading of portfolio positions and companies through private equity. PitchBook was founded in 2007 to provide transparency into a very opaque asset class. What started with John Gabbert, the founder, and a handful of researchers researching private equity deals has really grown to an organization of over 3,000 people in 9 offices around the world that are working hard to solve problems that investors are facing.
So PitchBook is a provider of data, research, and technology to participants in the private capital markets. And so we track the flow of capital from investors such as endowments and pensions and foundations into asset managers that deploy that capital into the private markets, specifically in the innovation ecosystem or in private companies that operate in the broader economy writ large. Investing is ultimately an information game.
The biggest risk investors face is transparency. It is hard to conduct due diligence. It's hard to access the right data. It's hard to ensure interpretation of the data is common and consistent across different assets. It's hard to figure out how this asset class sits next to public market assets. And PitchBook is shining a light on private equity, on venture capital, and private credit.
PitchBook has always been focused on 3 things. The first is solving customer problems as those evolve. The second is creating a profitable and strong organization that benefits all stakeholders, whether it's employees or investors. And the third is creating an organization with great people that share common values and an organization where individuals can grow and learn and develop.
40 years ago, Morningstar democratized mutual fund investing. Morningstar made data standardized and accessible, introduced common language to categorize funds, IP that helps investors read through funds, things like the Morningstar rating and the style box. And PitchBook has been doing the same thing across private capital markets for nearly 2 decades.
So I came to PitchBook fresh out of college, and I simply came to write a private equity newsletter. That was effectively how we built our brand, how we drove value into the marketplace and gave people insight into what we did every day, and how we built our position in the market as this pulse of private capital markets.
The one constant across my time at Morningstar and at PitchBook is really the people. I found myself very fortunate to be surrounded by great colleagues at PitchBook who not only were experts in their field, but also very generous with their time. PitchBook is shining a light on venture capital, on private equity, and private credit. We're doing that through expanding our coverage. Our actionable database is the foundation for all that we do, and creating analytics on top of that that help investors make sense of all of this data. Things like benchmarks that allow them to compare, like the VC exit predictor, that help investors take millions of companies and whittle them down to the companies that operate within the strategies that they're most interested in.
We look to collect data in ways that others can't, providing additional data, whether it's by segment, by asset class, by geography, so we're expanding all of those. We're expanding our research offerings by industry as well. Our software innovation is really exciting. It's through the use of artificial intelligence and machine learning. That's becoming very exciting for our customers as they get more and more data more quickly and more access. And then from an intellectual property perspective, we're providing solutions that others just simply can't, and ultimately making investment decisions a lot easier for those investors.
Private markets have grown tremendously over the last, call it 2 decades, for a number of reasons. There were outsized returns that were being generated in private markets relative to other asset classes, and that drove interest. And then there was a need for companies that needed a bit more flexibility in their investment capital in order for them to build the businesses they wanted to build in such a way that simply would not have been available to them in the public markets. So you look at industries such as private credit that have anywhere from $2 to $3 trillion in assets under management. They fill a massive void for companies where banks post-2008 cannot take on the same level of risk and lend to many of these businesses, but there are private pools of capital backed by foundations and endowments with very strong and sophisticated asset managers that can extend that capital, and that's something that simply didn't even exist anywhere near the scale it does today, call it 15 years ago.
The biggest names that were in the news, that were part of index constituents, that were part of mutual fund portfolio holdings were public companies. Fast forward, now we're seeing more and more private companies staying private longer, growing their asset bases, and really having an impact in the economy. So we're seeing names like Stripe show up in the news, and investors really showing interest in how do I add exposure to a company like that to my portfolio.
We're looking for progression, we're looking for innovation, and it turns out that doesn't simply happen on its own.
The market is changing dynamically. Being at the center of that evolution and driving that change is really exciting.